Silver hit $40 in the future market. Someone wake me up when we hit $100, please. I mean, I don't mean to sound dismissive, but silver breaking $40 has everyone buzzing like little kids just let out for recess. Let's keep it real. In the big picture, $40 silver isn't significant. I know that sounds crazy. Thumbnails are shouting, creators are hype, stackers are celebrating something they haven't seen in 14 years. But here's the truth. Stackers love factoids, little milestones that feel important only because we give meaning to them. And $40 is just one of those things. Yes, you got to break $40 on the way to 250, but that's not the finish line. It's like driving from LA to New York. Do you stop for a victory lap every time you cross the state line? Or do you keep driving and keep your eyes on the real destination? If you zoom out and look at the big picture, we still got miles to go before we sleep. Some of y'all get that literary reference later. What Robert Foster was really getting at is the idea that we have a long journey of things to do before our lives are over. The same thing can be said about silver. We are in a bull market, and silver has many miles to go before it's over. $40 is just a mile marker on a much longer road. Today, I'm going to show you 5 critical reasons why the $40 silver price is meaningless compared to the real story. $250 an ounce, which isn't fantasy, it's a target. But before we can get into that officially, I need to say, what is good, Stackers University? It's so wonderful to have you here with me today. Go ahead and hit that like button for good old Drstacker to show me some love. And while you're there, click on the link in the description to get the free ebook titled Your Financial Blueprint, Your Journey to Financial Clarity. It's all about helping you lay out your financial plan to build wealth. I also share how I built a $2 million portfolio of real estate only to lose it all because my financial house was built on sand, not bedrock. I also take you through the process that helped me save and ultimately invest $200,000 in 3 years. We've already had a couple hundred people download this, so please get it while it's still free. Now, let's talk about that $250 number that I'm so confident about. I'm not pulling $250 out of the air. In my 2 previous videos, I break this down based on the average moves across the last 3 silver bull markets, which averages around to about 413%. History doesn't repeat, but it does rhyme. And if it rhymes again, $250 is the logical destination. And after you hear these 5 reasons, you'll likely think that I'm actually undershooting this number. Reason number 1, stagflation tailwinds. We've entered an environment that looks a lot like the 1970s. Slow growth, sticky inflation, government spending more than they can ever pay back. In fact, you've heard Powell make all those points separately, but not together because of what it would do to the psyche of the American people. On top of that, you have the president trying to stack the Fed with people who will support rate cuts so we can refinance our debt and ultimately spend more money. In the last stagflation cycle, silver didn't creep higher, it absolutely exploded. The same playbook is setting up right now. $40 silver is just noise. The real move comes when stagflation forces capital into hard assets. Finally, as this chart shows, we are at the lowest point in history when it comes to financial assets versus hard assets. That rotation is inevitable. May not be imminent, but it's definitely inevitable. Reason number 2, the silver supply deficit. Truths and myths about that. So now here's where I'm going to flip the script a little bit. Everyone talks about silver's supply deficit as if it's gospel. Yes, technically, the Silver Institute calls it a deficit. But here's the catch, and we've covered this before. They also count investor demand in that number, which is misleading because those ounces aren't consumed. They're just taken off the market. That's not the same kind of shortage. Here's the behavioral finance trap that people fall into. People want to believe in a shortage because it supports the narrative of moonshots and squeezes. And when I say people, I mean the hypers who want you to buy from them and watch their videos. The hype cycle and the circus, it detracts people from the real message and what's really important. At the end of the day, it's not the deficit itself that drives the price, it's the belief in the deficit. When enough investors act on this belief, their buying creates real upward pressure, and the cycle feeds on itself. That's how silver can overshoot $200 or more. Reason number 3, silver supply and demand. And I want you to think of this as a friend and an enemy, or maybe we'll just call it a frenemy. We all know how unique silver is. It's both a monetary metal and an industrial metal. EV, solar, electronics, the demand is no question there. But here's the nuance. If silver's price goes sky high, industry will substitute. They've done it before, they will absolutely do it again. It's called supply substitution theory. What do car manufacturers do when palladium or platinum prices get too high? They swap one metal for the other. So yes, industrial demand adds strength to the case for silver's higher price, but it also exposes silver to weakness if the prices spike too fast. Yes, I know in some applications silver can be swapped, and in most applications, the alternatives are not just as efficient. Just don't forget that companies ultimately care about price margins. Regardless, I'm still willing to say the supply and demand nets in our favor. Reason number 4, de-dollarization tailwinds. If we're really being honest, central banks don't really care about owning silver. I know someone's going to be like, well, Russia just started buying silver. And I'm going to respond with, Russia? Is that our gold standard? Is that the best we can do? Is that who we should be following? Come on, y'all. That's like when all the crypto bros were all hyped about El Salvador treating Bitcoin as legal tender. It didn't really help their economy, folks. So what do we see? We see central banks stacking gold by the ton, not silver. But regardless, silver rides gold's coattails, creating what is called a halo effect. So retail investors who can't buy central bank sized gold bars or the price is too high, they turn to silver because it's accessible. It feels affordable. And that emotional driver is what adds fuel to the move ultimately. So again, $40 doesn't mean anything. The real story is when gold's de-dollarization premium starts to bleed over into silver and the demand spikes faster and far more than supply can adjust for. Reason number 5, paper versus physical decoupling. This is the monster under the bed. This is the one that should be making people really uncomfortable. Silver is one of the smallest markets in the world, yet the paper contracts traded on the COMEX and the ETFs far outnumber the available physical silver to like insane multiples. At some point, whether it's a short squeeze, a supply shock, or just too much money chasing too little metal, that system has to break. And when it does, 40 will be so far from our minds, we'll be laughing at that. The decoupling of physical silver from paper silver could absolutely send prices even higher than $250 because most investors often realize far too late what's really going on, that they have a claim to silver, not to the real silver, and that it can be redeemed for worthless dollars and not your silver. So here's the big picture. Here's the real point. If you're obsessing over $40 silver, you're missing the forest from the trees. On top of that, you're setting yourself up for a whole lot of Lucy and Charlie Brown thing all over again. The end result is that you will find yourself psychologically and emotionally worn out and unable to see the big picture as you lose confidence in what is likely to happen. Prices are going to go up. Prices are going to go back down. This is the volatile nature of silver, and it can feel like a never-ending roller coaster ride, and most people will stop out before they even realize the big gains because of the volatility. The last 3 major silver bull runs saw gains of, on an average, 400%. You run that math forward, and suddenly $250 silver doesn't sound so crazy. And when you break these 5 reasons down, you can start to make a case that $250 may be me undershooting. That is exactly why I shared the 25-50-50 profit ladder with you in the previous video, which will be linked at the end. So you don't get trapped by the headlines, don't get caught up in the gyrations of the market, and don't stop to celebrate every little victory. Learn to expect it. Keep your eyes on the big picture, because this is just the opening act, and the main event is still ahead. In the comments section, do you think $250 is a reasonable number, or am I underestimating the coming move? With silver knocking on 40, do you plan to make any purchases soon? Or you can just simply put an A+ in the comments if you received any value from this video, love stacking metals, or just want everyone to know that you always stack smarter and never stop learning. And don't forget, if you're ready to build a real financial blueprint that works, whether silver's at $20, $40, or $250, grab the free guide at stackersuniverse.com, and the link is in the description.